Did you know only 2.5% Indian invest in the stock market and you are going to be one of them? Congratulations, that's awesome. Anyway, if you are thinking how and where to invest your first 1000 rupees, then this video is for you. Just give me a few minutes, I guarantee you that you can manage your family and friends first 1000 rupees as well. तो देर किस बात की, let's get started. Number 1, invest in just one stock. 1000 rupees is not a big amount. If you are buying a stock worth 300, then you will be able to buy just 3 units or quantity of that stock. Moreover, those stocks which are trading at a market price above 1000 rupees are already out of your budget. Therefore, if you are planning to invest your first 1000 rupees, then you need to widen your selection criteria to the stock pricing between 1 and 1000 rupees. Otherwise, you might have to reject many good stocks whose market price is high, say 800 to 900, in case you are planning to purchase multiple stocks. Further, for such an investment amount, you don't need to waste time diversifying your portfolio. Selecting multiple stocks takes time and it's not worth the value. Number 2, invest in what you already know. The easiest approach to stock selection for beginners is to invest in what you know. There are a number of companies that you might have heard from the childhood and might already know a lot about it. For example, Maruti Suzuki, HDFC Bank, ITC, Coal India, Colgate India, Hindustan Unilever, etc. There are tons of companies whose products or services you already have been using and might be happy with them. Find out those companies and investigate them. Know who is the boss of the company, its future products, plans, etc. You will be surprised to know how many common companies have given uncommon profits. For example, Eicher Motors, Royal Enfield Bikes parent company, has given over 80 times returns in the last 10 years. MRF Tires has given over 17 times returns in the last 10 years. Symphony Coolers has given over 12 times returns in the last 5 years. The bottom line is to look around yourself and find some popular companies worth investing in. Search for the companies that you already know and make sure that they are doing great for the last couple of years or has an amazing business model that is easy to scale. If you are a working guy, it will be quite easy for you to find such companies. Just look at your industry and find which one is leading. For example, if you are in the banking sector, you might already know which bank is expanding fast in the urban and rural areas and opening new branches every week and has low non-performing assets, etc. If you are a doctor, you might already know a few good pharmaceutical companies which are producing the best medicine at a cheap price or working on the medicines for a rare disease. Even if you are a housewife, you can find a good number of companies that manufacture day-to-day life products like soap, shampoo, towels, edible oils, etc. Number 3, don't spend weeks researching your first stock. Although I am confident that you find a good company using step 2, however, if you are unable to find any company that you have good knowledge of, then invest in blue chip stocks. Blue chips are the stocks of those reputed companies who are in the market for a very long time, financially strong and have a good track record of consistent growth and returns in the past many years. For instance, HDFC Bank, leader in the banking sector; Larsen & Toubro, leader in the construction sector; TCS, leader in the software company. A few other examples of blue chip stocks are Reliance Industries, Sun Pharma, State Bank of India, etc. Here is the list of few top blue chip stocks in the Indian stock market. Number 4, don't make it a very big deal. To be frank, do not make this investment a very big deal in your life. The investment amount is too small to hurt you financially. Even if you lose 50% of your investment amount, you won't go bankrupt. Don't worry too much thinking about if the stock price goes down. It's not a big deal. Here your motive should be to learn, not to earn. If you are able to learn today, you can make tons of money in the future. However, if you want to save 1000 rupees today and are not willing to take any risk, you might save 1000 rupees but miss opportunities to earn lakhs in the future. Stay calm and enjoy the roller coaster ride. Number 5, stay away from penny stocks. Penny stocks are those stocks that are traded at a very low market price, less than 10 rupees, and have a very low market capitalization, are called penny stocks in the Indian stock market. These are the darlings of the new investors. The low market price of these stocks makes them quite attractive to beginners. However, these stocks are very risky. You might have never heard the names of most of these companies and very limited information about the companies available to the market. The stock prices of these companies are easy to manipulate. Overall, penny stocks are difficult to investigate for a new investor. My advice is stay away from penny stocks until you have good knowledge and experience in the stock market. Number 6, don't expect extraordinary returns. Don't expect high returns while investing your first 1000 rupees in stocks. Stocks are not lottery tickets. Even if you get a return of 100% in 6 months, still you will make a profit of only 1000 rupees, 166 per month. This is not going to affect your life financially until the investment amount is large or the principal is invested for a long duration that involves the power of compounding. That's why mark my words and set a realistic expectation for your first 1000 rupees investment. Number 7. Invest for dividends. Another easy way to start with the investment market is by investing in dividend stocks. However, keep in mind that with such a small amount, it's not a great idea to expect a lot of dividends. So prioritize the quality stocks that appreciate in terms of value. Eventually, your portfolio will grow and you will earn a lot of money. Reinvest this money and reshuffle the allocation of the assets to bring in more dividend stocks. With more dividend stocks, you can generate a steady flow of income. Number 8. Stay calm and disciplined. Have a disciplined approach to investing. Make a habit of monthly investment and keep aside a part of your income every month. You will not become rich overnight with the share market, but eventually with small amounts you will create a corpus of wealth. With discipline, soon you will learn how to earn 1000 rupees per day in share market. Number 9. Following the hard mentality. When you are learning how to invest money in share market, it's important to avoid a hard mentality. When you observe most investors are investing in a specific stock, it is not necessary that you must to invest in the same stock, as your financial goals and risk appetite may differ according to your investments. Keep your financial goals in the mind and invest in the stock market accordingly and not what others are doing. Number 10. Being impatient. Don't make emotions come into play when you are learning how to invest in the stock market. Being impatient with the investments is one of the emotions which needs to be avoided. The stocks you invest in may need more time to grow as compared to the time you have predicted initially. The companies may roll out growth strategies but may take months when those strategies start playing out. Investors tend to become impatient and expect soon from such stocks which can harm their investment plans. Thank you so much for watching this video. See you in the next video.